welcome. We're here with a very special guest. We got our 2026 RASM President and Broker owner of Catalist Realty, David Crawford. David, the stats just came out for July. Was there anything that really stuck out to you in the newest stats release?
I think it's a continual trend of what we've seen. Closed sales are up across, all market segments in both counties. Inventory is down pretty much across the board, which is kind of what we've been seeing. I think the general overall feeling is buyers and sellers are becoming more aligned with today's reality. You all see all the memes on social media and stuff about, sellers think it's 22, buyers think it's 08, and agents think they're 22 years old still. But I think the truth is everyone's kind of realizing this is kind of a new normal. We've seen, rates now have hovered around that mid 6 for 3.5 years now.
Yeah, people have given up hope that they're
so I think everyone wants to read into headlines on economy and what's going on here and there, and there's a lot of noise. But in general, I think the concept of anything major shifting either direction, I think is kind of calmed down, and I think people still have needs. You still have wants and desires to make moves physically. So I think there's just a more commonality between the valuation between buyers and sellers, what true market value is, and everyone's kind of settled into this new normal.
Now, is that coming from are you having to talk to a lot of buyers and sellers and bring them there, or is that kind of something that's happened naturally?
I mean, some of it happens.
It has been a trend for the market's been trending this way for.
Yeah, I was gonna say sometimes it happens organically, almost like a snowball effect. As some sales start to happen, you start to get some more sold comps, you start to get some more market data, and then the conversation becomes a lot less emotional and a lot less feeling when you're talking with a buyer or a seller, and you're starting to have a lot more data points to use that we could kind of use as comps, and they weren't still kind of apples to oranges. Mm-hmm. I think now with some more sales trends, and especially as those unit counts go up, we start having more data to pull on. Feel more confident that the buyer pool is getting back in the game and, kind of jumping off the fence, and gives us some more, data points to have conversations about specific numbers. We had a client who actually went under contract this weekend who's been looking for a few months. And then, our negotiation with the seller was very data driven, where a year ago we might have just had to say, this is our best feel, this is what it's worth to my client. But we were able to actually send a nice summary of some sold comps, what some of the differences were between, either pro or con or inferior, versus product. But it really helped the negotiation, and everyone feel a lot more like we found a win-win for everybody.
How the buyers kind of reacting to this? Because, you do see inventory when that usually starts to shrivel up or whatever. People are quick to be like, hey, there's not a lot of inventory. I got to raise the price on my house. How are buyers kind of navigating that type of?
It doesn't seem to be to the level where sellers are able to increase their prices because inventory is coming down. What I think it's doing is buyers that are true buyers, actively in the market, who will put an offer on something that they find value in currently, are becoming more aware that the opportunities may be going away if they take too much of their time. So they still have some time to make their evaluations, but when you know where you want to be, which community, which model, whatever that looks like, when something comes up that has value, throw your hat in the ring, put your offer out there, and see if you can find that happy medium, because that opportunity may not still be there. And I think buyers are starting to feel that specific on, a west-facing lot with a pool, whatever is that specific niche that they want, may be gone if they wait too long.
I think you are seeing that in the data with the days the contract are kind of slowly coming down, but it still shows that, hey, we're not just going to jump on anything like they did during COVID. So I think the data does absolutely show that.
Yeah, I think they're still being patient, and they're still, calculating their value proposition. But when they find something that's value, they seem to be more willing and able to make that move. And I think a lot of that is just not the potential of buyer's remorse of thinking that, if I buy now in 3 months, rates drop down, then I'm going to do this. But obviously under those circumstances, there's always opportunities to, renegotiate with your bank, refi your loan. But you may not have the opportunity on that house again.
Yeah. One thing we noticed in the data too is sales over $1 million. Florida Realtors now breaks those down for us so we can see exactly in different price tiers. But most of those numbers have significantly increased since last year. Is that something you guys are seeing in the market, more of a luxury buyer?
Yeah, I think there's a lot of wealth moving to Southwest Florida in general, especially Manatee and Sarasota counties. We still are, relatively more attainable than maybe some of our counterparts in Tampa or Naples on this coast. And I also think new construction is driving some of that up. And also a lot of our, high-end condos, downtown condos, a lot of the properties being built out on the Key, and of course, a lot of the new construction that came out from some of the 24 storms. So I think you're seeing new construction coming out of the ground across both sectors in the county, and also just a general overall higher foundation of a base price point of anything being built, even if we're talking, east of 75 and some of our newer, larger communities as well.
What about condos? Kind of what's going on in the condo market right now? I know that's been up and down like crazy over the last couple of years.
Yeah, I mean, I still think there's some hesitation on some of the older product on, what fees have gone up to, what they might continue to increase to. Obviously, a lot of that has to do with insurance costs and reserves. Some great data has been coming out from the state on insurance premiums, scaling back finally. A lot of the work we've put in the last 3 or 4 years doing our advocacy work has started to pay some dividends in the insurance markets. New construction condos seem to still have a pretty strong sales segment there. It might take a little bit longer. They're still multi-million-dollar deals, and of course, a lot of these take maybe 2 to 3 years to even actually come from vertical construction to certificate of occupancy. But I definitely think there is some light at the end of the tunnel for some of that older product to at least have a gauge of knowing what the future looks like, right, caught their reserves up, done their milestone inspections, and at least have the full picture to paint now.
Yeah,
the last couple of years, there was some question marks.
Yeah, they've had a couple of years to kind of digest it and at least know what they have to get in there. So
absolutely.
Yeah, I'm trying to think. Is there any other stats that stuck out to you, or anything you see are looking at coming up that you're curious about?
I think summer is typically a little bit slower, but I feel the data supports this, and what we've kind of felt on a daily basis is we really didn't have nearly as much of a drop off in activity and interest over the summer.
Yeah.
Whether that's families still making trying to make moves before the new school season starts, or in general just buyers that have been looking for a while. When that right opportunity comes on the market, whether it's April or August, jump when you find what you want. So
do you think that's a good point? Is like, people have been listing houses too. It's not like that's completely dried up. It's just where people are out buying them when they get there. So
yeah, I mean, we're churning. The burn rate is definitely faster than what the inventory is coming on, which is why we're seeing some of that supply go down. And of course, we still have some lock-in effect where there's a lot of people that we still meet and talk to that have a want, but not necessarily a need, and they would like to move, they would want to move, but until we can find the right value proposition, whether they're in a 3% interest rate, whether they're in the school zone that their kids are already in, whatever some of those hurdles stopping them from making that move, we try to find out when that changes. Yeah. I mean, obviously, there's been conversations on a federal level of doubling the capital gains tax liability from $250,000 and $500,000 to $500,000 and $1 million. That would really, really, I think, ease a lot more of that, segment of maybe retirees and maybe some of the boomer generation that's owned for a while that, might not need that 3,200 square foot house on the Key anymore. Their kids are gone to college.
They don't want to lose that.
But they're sitting on a big tax liability and want to find an opportunity to make that move. And even obviously in our markets, it could have been a public worker in the late 80s, early 90s that bought, $150,000 place out on one of the Keys. And now that dirt alone is worth a couple $1 million, depending on where they are. So it's not just, rich people.
Right.
I think there's just a matter of fact that capital gains hasn't been touched, I believe, since it was either 97 or 2003. Either way, it's been almost 30 years, not adjusted for inflation. And of course, what bought you a house for $250,000 or $500,000 in the late 90s is a whole different picture than what it looks like today in 2026.
Absolutely. Well, thank you very much for stopping by, David. For all the latest real estate stats, you can go to myrasm.com/statistics. They usually come out mid-month, so I think our next release for August stats is September 15th. So keep an eye out for those, and we'll be back. Thanks, David.
Sounds good. Thank you, Brandon. Thank you for everything you do and all the work that Florida Realtors does as well to provide us all this data and try to give you guys as much insight as we can.